I'm Sarah, a tutor here at Accountancy Learning, and in this video I'll take you through the AAT Level 3 Financial Accounts Sample Paper 2 Task 4. So Task 4 is about producing financial statements for sole traders and partnerships. The first part wants us to do some true-false questions. In partnership accounting, the current account shows the long-term investment in the partnership. So make sure we're reading this properly. Current account, long-term investment. So this should be the capital account. So the long-term investment by a partner is their capital in the business. So the long-term investment will show in the capital account, and the current account will be the kind of day-to-day transactions that go through that affect what the business owe them or what they owe the business. So that first one is false. The finance by section of a partnership statement of financial position includes the balances of the partner's capital accounts and current accounts. So capital accounts and current accounts in their financial position. So this one is true. So the finance by section will show both of these to then show how that partnership is actually funded. In partnership final accounts, the appropriation account starts with the gross profit figure. Be careful with this one, don't jump straight in, because yes, we do need a profit figure, but the figure that we need is the net profit, not the gross profit. So gross profit is only revenue minus cost of sales, but we need to then take out all the operating expenses as well before we put it into the appropriation account. So that one is false. In a partner's current account, interest on capital is debited and interest on drawings is credited to the account. So when we're looking at this one, we need to think about what does that interest mean for the business. So interest on capital, this is owed to the partner. So this then is a liability to the business. Interest on drawings is owed to the business, which then means this is an asset. So when we then look at our dead click to identify whether we'd be a debit or credit, when our liabilities increase, it's going to be on the credit side. When our assets increase, it will be on the debit side. So using that then, our interest, which is owed to the partner, which is the business liability, should be credited. And the question is saying debited. And interest on drawings should be debited. And the question is saying credited. So therefore, it's false. It should be the opposite way round. Identify which one of the following describes net assets. We're given total assets less current liabilities, current assets less current liabilities, non-current assets less non-current liabilities, or non-current assets plus current assets less current liabilities less non-current liabilities. So for net assets then, you need to make sure that you are taking all of the assets and liabilities into account. So we need to add our non-current assets to our current assets and take off both our current liabilities and our non-current liabilities to produce our net assets. So that will be the final answer there. Now we need to complete the following statement. The purpose of the statement of financial position is to examine the cash position of the organisation, ensure that debits equals credits, show how profitable the organisation is, or give a snapshot of the organisation's assets and liabilities at a particular point in time. So the statement of financial position is what we're looking at. So we can see immediately that profitable, that would actually be on the statement of profit or loss to see how profitable the business is. The cash position, you would be looking at cash flow statements, bank accounts, that kind of thing. Ensure debits and credits equal, debits equal credits. So that's where you're going to be looking at a TB. Your trial balance is where you're going to see whether your debits equal your credits. So therefore, it's going to be give a snapshot of the organisation's assets and liabilities at a particular point in time. So the financial statement will have all of the assets, all of the liabilities for a particular period. Next, we're given some information about Lucy, who runs a jewellery and gift shop. She is a sole trader and the year end is the 31st of March 20x8. And here is the trial balance at that date. So we're given the trial balance for her. The statement of profit or loss has already been calculated and the profit for the year is £33,054. And we're told that during the year, Lucy made personal calls on her work mobile phone. The cost of these totalled 180, including VAT, so VAT inclusive. In your exam, you can bring this up on the right-hand side by clicking on the reference box so that you can have question and answer next to each other. So then we're asked to complete the journal to account for these personal calls made on her work mobile. So this is effectively her taking something out of the business. So because the business has paid for her work mobile phone, they're going to have some mobile expenses. But these are a personal cost. There's an element of personal cost, 180. So because we're going to be taking it out of the business, that's going to be drawings. So remember, in the exam, you will be able to click on these boxes to pick which account you think it comes out of. So drawings, and again, remember with our dead click, if we are increasing our drawings, it's going to be a debit, and it's going to be the full amount, the £180. So we've dealt with her taking that out of the business. So now we need to deal with what that means for the business. So we've had £180, including VAT, of mobile expenses within the business profit and loss. So we then need to work out how to then reduce it. So 180 is the gross amount. So we can then divide that by 120 times 20, or divide by 1.2 and times by 0.2, which will give us our VAT figure of 30, and our net figure would then be 150. So bearing in mind, the business will have claimed that VAT back on those mobile phone expenses. The cost to the business that's gone through is the £150. So our next one will be mobile expenses. We're now going to reduce our expenses. So that's going to be a credit of 150, so the net amount. And then we need to deal with the VAT. So the VAT has been claimed back by HMRC on that full value. So it's now going to become a liability to pay that back over to HMRC because it ended up being a personal expense. And then you can see that both the debits and the credits in the journal match. So if you're asked to produce a journal, you must make sure that your debits equals credits. Then we're told to, following the input of this journal, calculate the revised profit for the year. So the original profit we had is given to us in the question, 33,054. So how are we now going to account for that when we deal with the mobile phone expenses? So we now can see that we are reducing the expense of the mobile phones by £150. So if we're reducing cost to the business, it means that our profit is going to increase. So 33,054 is our original amount from the question. That's up here. And we're going to increase that by the 150 from our mobile phone expenses that we did originally have in profit or loss, but now it's a personal cost that's been taken as drawings. So all you need to do then is add in that £150 to get the 33,204 as the revised profit. So following on from that then, we now need to complete the capital account for the year. Now remember, in the first part of the question, we were told that she's a sole trader. So when you've got a sole trader, the capital account takes all of the transactions. So whatever affects the amount that the sole trader is owed, it all goes through the capital account. Only in partnerships do you then have current accounts. So we need to complete the capital account for the year. So first of all, we want to see what is the brought forward balance. So what is it she has invested already? So we can take that from our opening capital balance here, 24,580. So again, you will choose from the drop downs in your exam, but there'll be some sort of brought forward balance, opening capital, something like that. It goes on the credit side because with our dead click, the balance of capital will be on the credit side as a liability, type liability for the company. Now, what else do we need to add in? So she's got 24,580 capital and she's made a profit for the year. So that's then owed to her. So profit for the year. And we need to take our new figure from the question that we've just done. Then what else do we need to do? We need to take into account the drawings that she's put through as well. So you put drawings in here as well, which is on the debit side, because that will reduce what's owed. And then we just need to balance it off to do our balance carried down. And then these two will also sum in the exam, and they will be at a 57,784 total. Then next and following on for the final part of this task then is using the figures in the trial balance, complete an extract of the statement of financial position as shown below. So now we need to fill all of this in. So let's have a look at what we were given for non-current assets and current assets. So let's go through our TB. So the bank account is going to be a current asset because that's the money that we've got in the bank. Our closing inventory is going to be a current asset because that's what we have in terms of inventory. We continue working down. We've got our receivables ledger control account is our current asset there. And then we've got to think about our non-current assets. And the ones that we've got here is fixtures and fittings. And then we've also got the accumulated depreciation related to those fixtures and fittings as well. So we can put those items straight into our statement of financial position. So our fixtures and fittings were at a cost of £6,487, and there was £4,255 accumulated depreciation. So you now need to minus the accumulated depreciation off of the cost to get the carrying amount, to give 2,232. So the current assets that we identified was the bank at 35,042, the receivables ledger control account at 14,442, and inventories at 11,424. Again, this is going to auto sum in the exam, but you will come out with 60,908. Now we need to have a look at current liabilities. So what are we going to have as current liabilities? So payables ledger control account will be a current liability, and VAT will also be a current liability. So payables ledger control account was 30,814, and VAT, now be careful with this one, because we're given 3,468, and it'd be very tempting just to put that figure in. But we've also got the adjustment here that we've made of £30 for the drawings, for the mobile phone expenses, the personal calls. So we've got a 3,468 credit already in the trial balance, and we've got another credit of 30. So you need to add them together to get the new balance of 3,498. And again, this will auto sum, but you will have 34,312. So we now need to work out what our net current assets is. And for that, you're going to be using your total current assets less your total current liabilities. So 60,908 less 34,312 to get 26,596. Then your net assets is going to be your current assets, and you're going to add together with your non-current assets to get 28,828. Now remember, with these questions, you've got these drop downs available to you to pick which account names that you're going to use, but you may have more space than you need. So make sure that you're confident with what's going to be classed as a current asset and non-current asset, current liabilities, because you will need to choose and not be put off by the fact there's another line there. So be confident in knowing what your account types are. That brings us to the end of task 4.